Good afternoon, traders and investors. It's Will back with another one. So, more bank collapse rumors. We also have crypto on the rise as a result of that. Jerome Powell coming in tomorrow. Will he pump or destroy the markets, as a matter of fact? And additionally, we do have Apple on Thursday, wrapping up the last of our major tech earnings. So, without further ado, let's look into some charts and see what we can determine from all of this, guys. So, S&P 500. Now, if you guys are getting bored, I don't blame you, right? So this has been the most aggravating range for some people for the better part of the last 6 weeks, right? On the weekly time frame here, guys, you can see we're still kind of stuck in the upper end of our range right up here. And without much of clear direction at all, right? We're kind of grinding higher on the 12 EMA on the S&P, trying to save what seems to still be a weekly bull flag. We haven't got this flat of a market since pretty much before the actual market collapsed there in late 2021. So I don't blame you if it is frustrating to be a long only holder here. That's why it's kind of been fun to write options. I mean, options writers do love a market that is flat like this without any bias. So let's see if we can take a look into the daily timeframes here and see if we can't get any more data. On the daily timeframes, what I wanted to show you guys is we had a break to the downside here of our range without any follow through whatsoever. So the bears failed to follow through. They failed to set a daily higher low and roll over. And instead, the bulls came in and reset the daily uptrend. Now, today we did have a pretty, negative day here. And I would have liked to seen the bears kind of stop around this area here. But the fact that they were able to push significantly lower could lead us to believe that we are in for a potential tightening range. I hate to say it. However, the one catalyst for that is Jerome Powell. Now, we're right in the middle of this move right now, guys. Literally smack down in the middle. So tomorrow's a very big day. Jerome Powell, should the market take this bullish, we would either be able to crack above this range that we've been stuck in for the better part of a month at this point, or we would be able to break it to the downside, confirm a daily downtrend, and potentially confirm some actual decent weekly consolidation here. So obviously, having a bullish lean, I'm hoping that Jerome Powell is able to push us to the upside. However, it would be nice just to get some form of clear direction here, because on the lower time frames, we're kind of just trapped as well. 4-hour time frame isn't much of a guide. You could argue that the most likely scenario is a higher low from this point on. However, if the bulls do put in some good work, then the most likely scenario may just be a tightening range from all of this. So really, if Jerome Powell wasn't there tomorrow, I would be expecting this. But since he is speaking, I am kind of expecting either a break to the downside or a break to the upside on these levels. So remains to be seen, guys. Bulls still in control. However, they really need to start making a push on this upper end of the range here. Hopefully they can do it with Jerome Powell's catalyst tomorrow with the FOMC or with Apple earnings. Now, on the NASDAQ, same thing, right? So NASDAQ stuck in this disgustingly tight range here for the past 6 weeks at this point. Bulls are in control. NASDAQ a bit clearer than SPY. We were able to set an actual weekly uptrend. However, it was kind of short-lived. We did not get much follow through on based on that on a percentage basis. Let's take a look at the daily now. So on the daily, you could see it a bit better, right? So we did crack above this range. We are coming in to set our daily higher lows here, right? Compared to this guy right here. So we do have only 2 major catalysts left. That's the FOMC tomorrow. It's going to give us some good direction, guys, on where the markets could be heading here for the next 1 to 2 months potentially. And we also have Apple. Well, Apple is one of the biggest earnings that everybody looks at in the entire market. So very, very curious to see what's going to happen with that. Now, there is a bullish lean on this chart. We are closer, right, to setting the higher low and continuation than we are to actually rolling over, right? If bears wanted to roll over, well, we would have to come down tomorrow, something like this. We would have to set a lower high and then do a full rollover like this, right? Which would send us into weekly consolidation. If you want to negate the weekly uptrend, you would have to close below this guy right here, coming right down to the moving averages. I'm still having a bullish lean. I'm not really expecting that to happen, but this could really go either way at this point. We have not put in enough space yet, right, to really confirm the fact that we are in the resumption of the weekly uptrend. So we got to keep that in mind. On the monthly time frame, we have created a decent amount of space here from the bottom, but you could always go down and retest these moving averages here on the longer term. Bulls do have it on their favor with the 2 monthly closes here above our short-term moving averages. Our RSI is now above the average, and the MACD does seem to want to cross to the bullish side. So bullish tilt for sure. However, bulls are not out of the woods yet. Bears are still in control. As long as we keep up with these bearish headlines, guys, it's tough for the bulls to do much damage. NASDAQ obviously holding up a lot better than the rest of the market did. Most of the weakness was in financials today. And you do see that on the Russell with a lot of the regional banks. So taking a look at the Russell here, Russell is doing, the same thing that it's been doing in the last 6 weeks, right? Staying in this lower end of the range here. As I've been saying, guys, my target range for writing short puts, which I did do today, was in this area, right? On the IWM ETF here, anywhere between 169 to 164. Obviously, you want to target the lower end of this range to give yourself a margin of safety. I was able to write in the 166 range when we were getting real big drops this morning around 10:30. And essentially what I'm looking for here, guys, is I'm looking for further consolidation at this point, right? So at this point, we were able to push up on the weekly a bit, but we're seeing that we're almost giving it all back, just tightening range. Could we get some downside follow through? Absolutely. But you have to remember that we do have a massive level of support here. So in my opinion, we won't really start breaking down further into this, further down from this range unless we get some real headlines. And in my opinion, guys, I mean, the news that happened this morning with Wall, right? We had Wall come down about 15%. We had PacWest come down about, at their peak down, they were about down 30%, but there was absolutely no news. It was literally based on the fears of FRC being taken over by the Fed essentially over the weekend, and there was no news specifically on these companies. So it was a bit of a head scratcher. It was kind of like, they were trying to price in fears preemptively should there be any news on the future on these banks, because we didn't get any deposit updates on these banks at all today. And for some reason, regionals just fell off an absolute cliff. So did KRE. Would be a regional bank tickers. They were down about 7.5% today. And there was really no reason for it, to be honest with you. There was no furthering of negative headlines other than the fact that people were kind of reacting to FRC, I assume, in a delayed fashion. And they were kind of trying to price in, should anything happen with PacWest and Western Alliance. But there was absolutely nothing that I could see, guys, that they were updating any negative deposit information or whatsoever. So it remains to be seen what's going to be happening with that. I personally thought that it was kind of a fears overblown day. So on the Russell, we are just looking to hold the bottom end of this range here. Bulls are going to have to put in some decent amount of work to really maintain that. What you want to see here, guys, is we are going to have to set a weekly trend. Either we're going to confirm this weekly downtrend, right? This long weekly downtrend, we're going to start actually confirming it, or bulls are going to be able to get a stop here. We're going to pop up and we're going to have to confirm a weekly uptrend. But one thing's for sure, it's going to be a very lengthy process, right? These are weekly candles, so we're still a fair amount of weeks away from this. So in that process, I will be looking to write options in this area until we do get any negative macro that either turns me off to it, or until bulls are able to confirm this to the upside. But that's what I'm looking for on the Russell here. So looking at Bitcoin now, obviously, guys, you know that the rotation trade, every time you see negative headlines from the banks, you have to turn to Bitcoin and you also have to turn to gold. So what did the two things do today? Well, obviously, you had a massive update on gold as soon as that happened, finally pushing above our 2,000 level once more. And our digital gold, right? Bitcoin, you had the exact same thing. So when the news broke, pretty much at 10 o'clock, 10:30, you saw the reaction in gold and in Bitcoin. So in this case, what we're looking for on Bitcoin is we're still in this tightening range. And it's been the same pretty much range. We broke above it, came back into it, and now we're stuck in it again. However, now it's gotten a bit wider. The range is anywhere from 31,000 all the way down to 27,000 at this point. So you really don't want to see bulls lose between 26,600 and 26,600, let's call it about 27,000, right? Any close below of 27,000, you see, we haven't really closed below there. So any close below would be fairly negative. We would be then targeting levels down to the 25,000. However, if bulls are able to hold this tightening range, this massive tightening range at this point, well, then we're just going to be looking for more accumulation. And on the weekly time frame, we can see it. They're still trying to save the weekly bull flag, right? Weekly bull flag, our moving averages are giving us time to catch up here on the moving averages, and it could just give us some follow through that's needed. Follow through levels that are probably going to be seen if we do get that uptick is going to be around 35,000, 34 to 35,000 is going to be our next area of resistance. And like I said, to the downside, 25,000. But expect this to run. If we do continue to get negative headlines, this can act as a hedge to the rest of the markets. And Ethereum, basically, I can't really speak too much on Ethereum because it is a catch-up trade at this point. It just basically does exactly what Bitcoin wants it to do. So you can see that clearly on the Bitcoin dominance chart. I'll show you guys real quick. Bitcoin dominance, absolute full control for Bitcoin here, right? And it's been that way pretty much for the larger part since the start of the year, right? So you can't really isolate Ethereum in there being any trades available. If Bitcoin manages to break out of its range here to the upside, Ethereum will follow. If Bitcoin breaks down from its range, Ethereum will basically follow. As of now on the weekly, I mean, this supply zone kind of bothers me, right? So it really does bother me. It doesn't really give much indication that the bulls have an easy way out of this, right? So bulls, if you want to take back this move, what I don't like is we're consolidating here at the bottom end of this entire move. So we're consolidating in the bottom 30% of this move. That really doesn't give me confidence that bulls are here to actually take it on their own and that Ethereum could continue to potentially take the lead from Bitcoin in the short term. So I still think if any move is going to come in crypto, it's going to be led by Bitcoin. Ethereum will be following. If Ethereum was consolidating in the top end of this range up here, then you could argue that Ethereum could take the lead for a range break from Bitcoin. But at this point, that's not the case. So the best case scenario is if Bitcoin does continue to push up towards 31,000, you get Ethereum start to push up in the top end of its range here, right? You're targeting about $2,000 to $2,100 here on Ethereum before breaking up for further targets to the upside. Now, I want to look at some individual stocks here because these are going to be key for the week, guys. Key, especially with the FOMC. Apple, right? Apple having not too great a day, but then again, the entire market didn't have that great of a day. So actually, you know what? Before Apple, let's look into, let's break it down by sector, right? So XLF really did not like the day today, guys, right? So bulls were well on their way to confirming a potential daily uptrend here, continuation to the upside, right? We were potentially forming into this week a weekly higher low. That possibility has now been delayed, right? So we're still holding on the weekly above our 200-week moving average here, but we're struggling, right? We're really struggling. Now it's looking, if we do get more negative headlines, that the weekly higher low has to be set lower. But I really don't like how deep we're cutting into this move, right? It just leads you to believe that there could be a scenario where something like this does play out and we come down and test the lower area of this range here, which would be around the $30 mark. Bulls really don't want to see that happen. You have to hold these lower levels at this point. Anything closing below about your $32 area would be fairly bearish. Now, bears still do have to confirm a daily downtrend at that point. So we haven't really confirmed. Now we're kind of in this ugly range, right? So if bears want to confirm the daily downtrend, you would have to really break down below, come up, set a lower high compared to this, and break down below. Then I could comfortably say that XLF isn't a daily downtrend. However, you do have names that have quite a bit of space left, right? So JP Morgan filling the gap here today, right? We do still have a massive gap down here, but if you look at it on the weekly time frame, I love these weekly time frames. We do still have a lot of space to come down into these moving averages for further support. Other names like Goldman Sachs. Goldman Sachs has created as well a lot of space to set that weekly higher low. So you just have to look at the larger players, guys, right? Have to look at the larger players. Morgan Stanley not looking that hot on the weekly. However, we do have a lot of space. Morgan Stanley would actually be one of our first contenders for a potential weekly downtrend confirmation. And that would be losing the weekly uptrend for the first time since pretty much they've had it since July, right? Been a weekly uptrend since July. And if we were to confirm this to the downside at this point, that would be the first time in almost a year that you would end up in a confirmed weekly downtrend. So you really don't want to see that happen on some of these major financials. So financials is going to be the target area to look out for because it is a large weight in SPY and it does play a large portion on the gains there. So as you can see, XLF was down by about 2.25% here. Healthcare wasn't down nearly as much, not even down 0.5%, and QQQ on the day was only down just under 1%. So XLF clearly the market loser here. It's going to be only affected by the banking headlines, guys. Really nothing else to bring XLF down here. We're going to have to look at those headlines and how it impacts price action, but you definitely want to be holding these lower levels because if not, we will confirm further weekly downtrends and then the levels, we start really pulling back into these COVID recovery areas, which would be really kind of disastrous if you ask me in terms of price action. Now, XLV kind of our sector that's holding up the best. Why? Because it's a defensive sector in the midst of a recession. So if we do get recession fears, XLV is the one that usually does hold the best. So as you can see, guys, on the weekly, we are still trying to hold this weekly bear flag. This is actually one of the sectors that looks the healthiest with QQQ, right? So they are pulling their fair share of the weight with the Qs to kind of hold up SPY. So as you can see, we are holding our weekly moving averages here, holding a very decent level. That's what you want to see. You really don't want to see bears take back a lot of this move, and it could potentially take us into a upswing here on the weekly. That's what you want to see. On the daily chart, however, we are kind of stuck at this point, right? So we were trying to confirm a furtherance of the daily uptrend. However, now bears have come down and we've put in a lower high potentially. What you don't want to see is bears able to roll over. What you do want to see is kind of a furtherance of the tightening range, something like this, which would really make us tight on the weekly, ready for further upside continuation. But like I said, guys, this is going to go one of two ways. We really have to wait for the FOMC for the markets to pick their direction. All right, taking a look into some of our tech names first. So Apple is really going to be make or break with earnings, guys, at this point, right? So Apple is getting so close to its all-time highs. We've now slightly broken the downtrending channel, right? The downtrending trend line. And we are currently in our big resistance area. So this is the time that Apple's always been getting rejected from in the past, between the 170 to 180 range, right? It has not been able to really close hard in that range every single time it gets there. It kind of sees these hard rejections right before we go into weekly consolidation. Will this time be the same? Well, remains to be seen. I wouldn't be surprised if Apple does have some really good earnings and we do gap up into this range. It's very possible that the next move, let's say we gap up somewhere up here, very possible that we start filling the gap towards the downside thereafter, which would kind of allow us to fill further gaps down on either Microsoft and Meta, which would bring us further consolidation in the weekly timeframes on QQQ. So I'm just trying to put all of this together, guys, and see where our major tech names are and what it could do to QQQ in relation, right? So Apple, really going to be make or break. Bulls at this point are in full control of the weekly, full control of the daily time frame as well. As you can see, we are just looking for a higher low at this point before potential further continuation to the bulls. I'm going to be waiting for earnings on this one, guys. I don't really want to call it before I see earnings because this could go either way. We could either set the furtherance of the weekly trend in motion, or we could reverse and potentially come down below the 163 area. So that's something that you wouldn't want to see. If something bad happens with Apple, we would come down right into here into our support level, which would be about the 163 to about 160 area. That's the next level of support to Apple, all the way down here. And obviously your areas of resistance, like I was saying, is anywhere between 175 to around 179 areas for Apple. So really curious to see what happens with this one, guys. AMD and semiconductors. Well, AMD didn't have a great day at all after hours, right? So as you can see, after hours, it won't show it, but after hours, we were around $84. I'm not too sure why it's not showing after hours. Let me see. All right. So yeah, so we're around $84.09 on the chart. So $84.09 would put us pretty much, I've had these two yellow lines here drawn pretty much since last week. The areas of contention for this stock pretty much. So let me just take those off real quick. So we are currently in a daily upswing. However, pending a weekly trend confirmation, right? So this is what happens. We came up with the bears cut down very, very deep into this move, right? I would say they took back over 60% of this entire upswing. And now the most likely scenario became a higher low. Now, with the earnings, what happened is they just said it because this stock at this point, the weekly candle will be opening up anywhere down here in the 84 range, right? So remains to be seen if our bulls can hold this 84 level, which would be very big for them, or if we confirm a weekly downtrend potential, right? So this would be a continuation of a daily downtrend and potentially into somewhat of a weekly downtrend at that point if we do confirm to the downside. So you have to be very, very careful on these semiconductor names, guys. I'm just thinking of how this could play out, right? As we were saying last week, the bears were able to cut too deep into this most recent bull move, and with names like Nvidia, right, that are looking like they want to curl down, and you know that the move is extended, right? You have to be very, very careful with semiconductors in this area. So everything relies pretty much on Jerome Powell tomorrow. If we get broad market support, it'll allow semiconductors to kind of take a breather, right? Earnings haven't been that terrible on them. You saw AMD might have had some negative guidance, but ON Semiconductor had some great earnings in the past, right? So they came out Monday and they were up about 6% on the day on Monday, right? Even 8% on the day, continuing that today. So it's kind of a mixed bag in terms of semiconductors now. What you want to see if you're in the semiconductors bull, you definitely want to see SMH hold this level of support right here. So we have to hold this, guys. You do not want to see bulls roll over, set some form of higher low, and then close below this line. This is our last area of defense before significantly losing the weekly uptrend that we've been having pretty much for the better part of the last 6 months, right? So that's the last area of defense for the bulls in terms of semiconductors. Moving on to Amazon. Amazon was our one beacon of green today on the markets. It was kind of funny, right? So Amazon, I'm going to run through these quickly, guys. I don't want to make this one too long because we are pending big news tomorrow. So Amazon was our best name on the day. It was one of the only names that was green on the day, as a matter of fact. So Amazon still holding our 100 level of support. As you can see, we are below the moving averages right here. We're kind of creating this widening range right here. So on the daily, it's not too pretty, but as you can see on the weekly, we are still holding somewhat of a weekly uptrend. Bulls absolutely need to hold these lower levels of $98 to $100. Upside targets will be 109, 110. As you guys know, my target area for writing puts is in the lower 90 area for Amazon. So remains to be seen what the FOMC is going to do to this chart tomorrow. I'm liking the fact that we are holding the weekly moving averages though, especially after earnings. So looking for further continuation to the upside, but wouldn't be surprised if we do get some pullback should we get any negative macro. Now, looking into let's go take a look at Microsoft. So Microsoft doing a very, very good job of not giving back much gains today, even despite the fact that it was a big red day. So as you can see, guys, we did start off the day fairly negative, and bulls were kind of able to consolidate. Not much going on here on this chart. We are looking for a potential rollover here into our moving averages. Nothing significant. If we do get really bad news from Jerome Powell or bad Apple earnings, expect this chart to start to roll over on the daily as well, but don't want to get too ahead of ourselves, obviously. Bulls are still in full control of the weekly time frames right here. Microsoft is just churning higher. Anything above around 275 will be a weekly higher low. So even if we do pull down for a few weeks, it's still going to be an uptrend for a long time, right? So we are just looking to set that daily higher low somewhere in these areas, and that'll be pretty much done tomorrow. Either we're going to have some bullish news and continue our way to the upside with the FOMC, or we're going to have some negative news and we're going to start rolling down. We're going to start rolling down into that. Microsoft, however, at these levels for me is a bit too rich for me to be trading. So let's go on to Meta. Meta kind of in the same position as Microsoft with earnings. We've left a big gap. Bulls are in full control of the weekly. So anything above our 207 area will be a weekly higher low. On the daily time frame, still a lot of area to fill this gap, right? So positive news tomorrow. This would be a daily bull flag. We will get continuation potentially. But if negative news tomorrow with the FOMC and he's hawkish, well, we might start filling this gap over to the downside. and which would be good for consolidation, right? So we still have so much space here that it's going to take a long time for me to say that unless we get something like this and a rollover, we'll still be in a daily uptrend at that point, guys. It's really simple, right? So don't want to get too ahead of ourselves. Tomorrow is the day for that. Now, Google, tightening range, right? Last 6 weeks, not able to break 110 to the upside and not able to start close below the one. We're not able to close below again below the 100 mark. So tomorrow I'm looking for one of two things. I'm looking for either daily bulls to lose this 103 and start moving down into our 100 target area here. I would love to write puts here in the mid 90s, so that would help me out with that. Or we're looking for bulls to close. As you can see, guys, we're having a hard time closing candles above the 108 area. As you can see why, that's my purple line. This is a big range, right? I can even draw another line here. It's like a channel, right? So anything between the 106 to 108 channel is very hard for the bulls to close within, right? They kind of get rejected every single time. It only takes a few days and we kind of get rejected and bounce out of it. So what you want to see if you're a Google bull, you want to see the bulls close above here and stay above there. That would really confirm your weekly uptrend, which we haven't really confirmed. We've kind of been flagging here for a better part of the last 4 or 5 weeks at this point. You know, maybe bulls are getting slightly frustrated, you Google bulls. I understand you. I'm looking for writing puts in the mid 90s area to high 90s, right around this 200 weekly moving average here. And pending news tomorrow, one of two things is going to happen. We're either going to break to the downside where we're going to find further support, or we're finally going to be able to push to the upside. Tesla, right? What is it going to do is the $1 million question. Well, guys, you really have to look at the lower time frames. Lower time frames are our guides on this name, right? So like I was saying, guys, in order for us to do anything on the daily charts, we have to confirm the lower time frames first. So what did bulls try to do? Is we had to reset the hourly time frame, right? So hourly bulls did a great job. We tried to set the hourly higher low, double top, and now we rolled over into kind of like a double bottom pattern. We're kind of like ranging. We're doing the same form of range here that we did on the weekly, right? So it's almost the same thing. So the proof really has to be on the bulls, right? You want to see your bulls. Oops, I don't know why I did that. You want to see the bulls at this point hold your 159, which would be the low of today and the low of Monday. You want to see them hold this level, and either one of two things is going to happen. We're either going to continue to tighten up, which is going to give us a good opportunity for a break to the upside, or we're going to flat out break it potentially tomorrow with the FOMC, or break it to the downside. Now, obviously, if you break it to the downside, you will have just lost your hourly uptrend, and all of that move will kind of have been in vain. Or if you break it to the upside, what you're going to do is you're going to confirm a 4-hour uptrend. So in my opinion on this chart, the 4-hour time frame is the most important here, right? So as you can see, we are currently doing a 4-hour bull flag below the moving averages. If you're a bull, what you want to see is something like this that would confirm the 4-hour uptrend for you. First 4-hour uptrend pretty much since the drop started happening after deliveries, essentially, right? So that'll be the first 4-hour uptrend confirmation. That's what I'm looking for. Obviously, if bears roll over here, it's going to have cut too deep into this move. The most likely scenario then just becomes a 4-hour lower high and a potential rollover, which is not what bulls want to see. Obviously, if the bears do take control, well, we're going to be targeting our gap fill areas here around 145 to 147 before future support. And if we do confirm the 4-hour uptrend into a potential daily upswing, well, obviously you're targeting to fill this gap up here, right? All the way through 176. So those are the names I'm looking out for. As I said, guys, I do have some trades open now on IWM in the 167 area. I did put in another trade in today, guys, that I'll share with you. American Express, great company, great margins, right? They were, in my opinion, unfairly hit by the financial headlines today. So I was able to pick up some nice puts here on the short side for the 147s for this Friday. Very, very rare will you actually see American Express, if it's not a negative macro headline day, drop 4% on a day, right? It's usually not that volatile. The only times you can see that happen is back here when we were having the big drops all of last year, right? Pretty much since the start of this year, we haven't really seen negative red days on AXP like that except for the banking crisis days, right? You'll be hard pressed to find a negative 4% day on American Express otherwise. So I was able to capitalize on that, wrote some puts right in the support area here, which ties into larger support to the downside should we break further down into this area. And that's the only two plays that I took out today were American Express and IWM. Why? Because we have very, very big data tomorrow from Jerome Powell. And like I've been saying in the past 2 weeks, I don't like writing many puts into these big data, big earning weeks. And also haven't really been keen on writing big tech, even though they did come down today, because now, a lot of them are kind of high after earnings and we haven't got Apple yet. So I'll be interested in writing potentially Tesla, depending what happens tomorrow, depending what happens with Apple. I would be keen on writing Tesla in the low 140 area, but we haven't been getting that confirmation yet. And also Enphase. Enphase I also want to be writing because they're hugely profitable. And I feel as if they were being unfairly hit with the whole earnings guidance lower. So I would be loving to write puts on Enphase within the 130 area, which ties into this really big support range here that we've established here over many years at this point, right? 2021, 2022, anywhere between the high 130s and the lower 110s, right? So we'll be looking at the premiums depending what happens tomorrow and depending what happens with Apple. But for now, only have IWM and American Express went pretty light leading into this week because of the headlines that we have, right? So I hope you guys enjoyed the video. Consider giving it a like. Consider subscribing. If you enjoy my market rundowns and my trade ideas, we'll always be willing to share with you all the trade ideas that come to mind and whatnot. I love being transparent with you guys because I know a lot of channels, they just do the rundowns and they don't give their plays. So that's what I want to do in the future, is give you guys more and more plays, and I hope you do appreciate it. So I love you all. I hope you had a good day trading, and I'll see you tomorrow. Don't get too greedy for the FOMC. Wait for the release and then potentially try to make the plays. Take care.